the rupee has been close to its all-time low, close to 77 to the dollar, and there are several reasons for this. One of them is the rate at which foreign institutional investors and FPIs are exiting from equity markets. High commodity prices don't really help the situation either. And as geopolitical risks increase, more funds flow to the dollar, which is seen as a safe haven, a safer investment. So what does a rupee which is so weak actually mean? What do you think, or what do we think that the Reserve Bank of India is going to do about it? To speak on some of these factors, I'm joined now by Jayesh Mehta, MD and Country Treasurer, Bank of America Merrill Lynch, and our very own Mythili, Bhusnurmath, Consulting Editor, ET Now. Welcome. Thank you for speaking with us on the India Development Debate. Mr. Mehta, great to have you on the show. Let me begin by you giving us a sense of whether this is the worst or is it going to get worse?
At this juncture, we can only hope that this is the worst, but there is no surety as to what is going to happen. So we still have to be completely open about it. How long it lasts and how worse it gets, we don't know. But we can just hope that, yeah, it is not only India, it is disturbing the whole world. And therefore, these things don't last. Hope, again, I'm saying it's a hope that hopefully it does not last long. But otherwise, I don't think there's anything to pinpoint out at this juncture, whether it will, continue or not.
So, Mr. Mehta, just to explain it simply for our viewers who are watching right now, the longer this conflict continues, the worse it is for the rupee. So the only hope right now is if this conflict wraps up or reaches towards an end early. And do you think the time is ripe for the central bank to intervene?
Yeah, so I think even central bank would like to, keep their ammunition, wait for it. We are now, right now, suddenly moved from 100, 100 we were comfortable, 100 we were kind of okay, we could have managed, we have good reserves. 130 level definitely gives you a little bit of panic. And then who knows, some researchers are talking about 150, 170, 180. We don't know that number. But as long as it is shortened and it is short term, and therefore the average comes down dramatically, that's a very different story. And right now, of course, the forward rates are lower, but then that is again more on hope. So as I said, if it goes to 150, 160, remains there for a longer period, that definitely weighs on our foreign exchange, and maybe that is a time. And right now it is more about the expectation. And with every move on crude, we are reacting on the dollar rupee rates. So from that perspective, of course, we are now globally linked market. If you look at our own local market, it's only need-based. People can buy and sell dollars. But now we are a globally linked market. So you have global players, and they are all going to definitely know, they all know that India is a big importer, and that's what is happening. So you are seeing the offshore prices moving first, and then that has to be followed by the local prices. And now with it opening up, NDF and the local flows is much easier than before, and therefore we have to bear that volatility for the time being. But as I said, there are people in the camp who are talking about that the oil crude does not stop at 130, 135, can go to 150. So I personally am not of the again, I'm more on the hopeful, positive bias side of a view, but that's again purely hope.
Yeah. It's so difficult right now to find out what is rhetoric and what is real. We were telling our viewers earlier how the Russian deputy prime minister is claiming that if the Western world cuts off supply, crude will go to 300. But again, that could be rhetoric. Mythili, can you, spell out for our viewers what is the impact of a weak rupee to the dollar on various parts of society? I mean, looking at it beyond, forex traders and currency markets, but it impacts everyone, doesn't it? Importers, exporters, those who are doing business, students, travelers. There is an all-round impact on every part of society in a sense.
Absolutely. And we must remember we are a poor country. in which case when the dollar rupee weakens against the dollar, what you're going to see is its immediate impact on inflation. Estimates range from saying a 10% hike in crude prices results in as much as a 50 basis point increase in inflation. And remember, we already are over the RBI's upper band of 6%. January inflation came in at 6.01, and the wholesale price inflation has been in double digits for 10 consecutive months. So if we see a continuation of this situation, whereas against the original estimate of crude being roughly $70 to $75 a barrel, we are now staring at $130, $135 a barrel, close to double that price. So I think the first thing that really impacts every Indian, and remember, as I said, we are a poor developing country, however much we like to think of ourselves as a middle income country, the reality is that we are very skewed income distribution, as a result of which the first and foremost place where it hurts every Indian is inflation. High oil prices impact us through inflation, most of all as far as the human welfare angle is concerned. It impacts our fisc, because as you've seen, because of state election, despite all the talk of oil prices being freed, oil pricing remains highly political. Oil prices have been kept constant, the pump prices have been kept constant because the elections were on. Now that the elections are over, government has only two choices. Either it revises oil prices as it should, if we say we are free oil pricing, in which case you will immediately see the impact on inflation, or the government does some increase in oil prices and some cutback on taxes, in which case the fiscal deficit will increase. And ultimately, it will again impact the common man through higher fiscal deficit, higher taxes, etc., etc. So there's just no way we can escape the pain of higher oil prices. It impacts our fiscal position, it impacts our current account position, it impacts, of course, our exchange rate and inflation. So there's nothing good about high oil prices for India. In fact, it's perhaps the worst kind of situation we could possibly imagine. And as Jayesh says, the only hope is that it will not last for too long.
$132.56 dollars per barrel on Brent right now, close to 7.5% up. Mythili, just a follow up over there, and something that I asked Jayesh as well. What could, and what should the Reserve Bank do right now with the rupee in this kind of a situation? I'm sure, of course, they must be observing very carefully what's happening next. What is the likely next step to come from the central bank in such a situation?
Well, it has to do a very, very difficult tightrope walk, because you don't want the rupee to be volatile. Even if you think that there is a case for some kind of weakness, you don't want it to be a volatile, depreciation. So you will intervene, but every time you sell dollars in order to kind of prevent the rupee from depreciating, you are basically withdrawing rupees from the system. When you withdraw rupees from the system, you are tightening liquidity at a time when the RBI has gone out on a limb to say that we are having an accommodative stance. So the RBI is really not the right hand not knowing what the left hand is doing. You want to keep an accommodative stance, you want to keep liquidity ample, but if you want to support the rupee, you're draining out liquidity. So this is the classic trilemma that we talk about, that you cannot really have an independent monetary policy if you want to have control on other things also, which the RBI and a country like ours with capital controls does want to have. So it's really going to be a very tough call for the RBI, and it hasn't made matters easier for itself by keeping liquidity so accommodative in the past, as a result of which, unlike other countries, we're already starting with inflation very high. So there's really not much scope for inflation to rise up very much more without hurting people and hurting them where it hurts them the most, particularly because we've seen food prices also go up along with the increase in oil prices. So I'm afraid the RBI has dug a bit of a grave for itself. So this, of course, was something perhaps that nobody could have foreseen. But in all their modeling, they were very overly optimistic, saying that we model for every conceivable situation. The reality is that in today's world, it is impossible to model for every situation. So sensible central banks always keep some wiggle room, some elbow room, which the RBI really failed to do. And today we are paying the price for that. If inflation was at about somewhere around about 4% or lower than that, we could afford to see inflation go up high. But at 6%, how much more can we afford it without hurting the poor Indian in the country?
Yep. It's truly turning into a very tricky situation as far as India is concerned. Every uptick on on crude is definitely something which hits us directly and hits us first. Jayesh Mehta, just your outlook, and I know this is a tough one. You're probably going to say no one knows what's happening next, so it's difficult to predict. But your outlook, do you think that the rupee is likely to stabilize? in the next few weeks, or does everything just hinge on what happens geopolitically?
So I think many macro factors are there on the geopolitical side of it. Other commodities than oil also impacts. But for us, the biggest impact is oil. Of course, our modeling and others must have been done at $75, $80. At $100 oil on an average, I wouldn't be too much worried, because if we look at RBI's forecast on inflation for the second half is around fourth quarter or so, and 10% increase, maybe 20% increase, 30% increase from there. You're still below 6%, which is in their comfort zone on a forward-looking basis. But at this juncture, we don't know whether it is stopping at 100, 130, 150. We don't know. 160, there are some analyst reports talking about 180, right? Now, that kind of situation, and even RBI cannot predict what's going to happen. So I would think they would rather wait and watch. And of course, the typical March selling is a little bit of which is there, which is kind of supporting. But as I said, we are a globally linked market now. So we can't really just manage it because if we start using it now, our reserves, it will get depleted when we need it. So from that perspective, one has to be very cautious about the volatility management one has to manage.
Well, tough times ahead, definitely. We're watching this space very, very closely. The Brent at 131.84. So closing in at 132 even as we speak. So we'll be watching the story. Thank you so much, Jayesh and Mythili, for joining us for this big story this evening.